Welcome, and thank you for tuning in. You're listening to the Beyond 50 radio program. I'm Daniel Davis. Well, we're approaching mid-April, and for most people, we pretty much know what that means. We dread that it comes, but it's something that we all have to face, and that is taxes. Sometimes we pay just enough, sometimes we pay too much, and sometimes we may get lucky and have a refund. But one thing is certain is when that opportunity comes for the IRS to have to collect some kind of a payment above and beyond what you expected, it can get very, very ugly. In fact, so ugly you can find yourself in the Daily Journal of Commerce with, thousands, hundreds of thousands, even millions of dollars of tax debt. And it's not one of those that you can avoid the phone calls. They go after things. They take your homes, they take your cars, they throw you in jail. I mean, there's a whole slew of things that can be possible that they can take on to get their money. Our guest today has about 3 decades. He's been the nation's leader in taxpayers' rights and defense, IRS abuse and prevention and cure. So it's nice to know that we have a patron saint out there who can actually defend us against the IRS. His book is How to Get Tax Amnesty. It's the guide for forgiveness of IRS debt, including penalties and interest. Boy, there's relief even greater than Rolaids. I'd like to welcome to the Beyond 50 radio program our guest today, Mr. Daniel J. Pilla. Daniel, thank you for joining us here on the program today.
Hey, thanks for having me, Dan. I appreciate it.
Geez, it must really make you feel good when you get up during the day knowing that you know what you know.
Well, I tell you what, I spend a great deal of time helping people, Dan, and that's what it's all about. I mean, we got so many people in trouble with the IRS today. It's like nothing I've ever seen, really. And as you said, I've been doing this for over 30 years, and there's more people in trouble with the IRS today than ever. And so it's important for people to understand what their rights are and be in a position to deal with the IRS and minimize the problems that these folks can cause.
Yeah, you're not kidding. Now, what is going on that more and more, it's just like breaking laws now. I mean, this day and age, I was just listening to a program not too long ago where they were talking about, for instance, driving and citations. I mean, everybody seems to be concerned about rising gas prices. But I say, no, what's even uglier than that is when you get a ticket. And it isn't so much as the old days where if you got a ticket, let's say the fine was $25, they now add what are called assessments, which are 3 times the amount added on to the actual fine. So $25 turns into $150. And it seems that, that more and more the government in many ways are just finding ways to basically take hard-earned money out of your pocket, and you just kind of wonder, what do you do? Do you give up, wave the white flag? What's our next step here? What's going on?
Well, that's a good point. I mean, we see this with the Internal Revenue Service all the time. As a matter of fact, one of the measures of just how aggressive the IRS is getting and how bad things are getting for folks out there is the question of penalties. You talk about penalties with a driving ticket. Well, okay, in last year alone, the IRS issued more than 36 million penalties against individuals and businesses, and that doesn't even include the interest. When you got a tax liability, Dan, the IRS adds the failure to pay penalty to that, which can be 25% of the tax liability. They could add the failure to file a return to that if you didn't file on time. That can be up to 25% of the tax liability. Sometimes there's an accuracy penalty that can be between 20 and 40%, and then the interest is on top of all of that. So what starts out as a difficult situation for a taxpayer ends up as an impossible one when the IRS adds all these penalties and interest.
And there's some really scary stories out there for folks about how they go about trying to collect those things too. I remember this was pretty alarming back in I believe it was the early 1980s as I was in speech club, and one of the speeches I started researching in was the IRS, and here there was this lawyer that was talking about there are people out there with significant tax liability that are basically not being chased down. It's the little guys that are getting shagged down. Like for instance, they were going after a doctor who only owed like $600, and they couldn't figure out, they're scratching their heads saying, what are they going after these little guys for when there are people that have liabilities that are much greater? Is there that kind of bias going on out there?
Well, no, there really isn't. I mean, there's always an anecdote here and there about this situation and that situation. But as a practical matter, Dan, once a tax liability is assessed, once there's an obligation on the books, the IRS is going to go after the high dollar amounts harder and faster than they will the low dollar amounts. For example, if you've got somebody that owes $100,000 in taxes, that case is going to be assigned to a local revenue officer. A revenue officer is a tax collector, and that tax collector is going to be the guy that's pounding on the door, going to your bank, showing up at your place of employment, that sort of thing. Whereas if you got a low dollar tax liability, $600, $1,000, $2,000, that sort of thing, that's going to be handled by a function in the IRS called automated collection. And those people are like collection agents. I mean, it's just computer notices, send us a check, that sort of thing.
Wow. Now, how did you decide this is what you wanted to do with your life? What moved you in this direction?
Well, I didn't decide it. It was kind of fate decided it for me. It's kind of a funny
God
story.
God came down. Is that what it was?
Yeah, exactly. My father had a small business here in our hometown of St. Paul, Minnesota, and I still live in the area now. But my dad had a small business, as I said. He got behind on his employees' withholding taxes, and in 1974, the IRS showed up at his place of employment, at his print shop, his printing business, and they shut it down. They levied the equipment. They put red tags on the doors. They ended up selling the equipment off for a couple of cents on the dollar, and then they turned their attention to the family home.
Oh, boy.
And, in about 1998 or so, or I'm sorry, 1978, I'm dating myself here, in 1978, they turned their attention to the family home. They tried to seize and sell it for the back tax liability, and that's when I got involved. I was 18 years old at the time, and I remember coming home, and my mom handed me an envelope. She's sitting at the kitchen table. She hands me this envelope and says, and so I read it. It's from the IRS. I read it, and she says, well, what do you make of this? And I said, well, it looks like they're going to try to seize the house. And she says, well, what do we do about it? Well, of course, I had no idea what to do. As I said, I was 18 years old at the time. But what I did is I went over to the local law school. We lived on the edge of downtown St. Paul, and the law school right downtown there. And I went over there, and I found myself in the law library, and I just literally started fumbling through the Internal Revenue Code, and I quite literally stumbled onto the section of the tax code that limits the power of the IRS and provides certain restrictions on what they can do. So I start reading in this section of the code. I didn't get 6 pages into it and discovered that they were proceeding illegally to seize that home.
Wow.
So I did what any 18-year-old would do under the circumstances, Dan. I pasted together a Mickey Mouse lawsuit, and I sued the IRS. And what could go wrong with that, right? So here I am in a federal courtroom in Minneapolis. I've got the IRS sued, trying to stop from seizing the house, and of course the IRS flies an attorney in from Washington D.C. to have my case thrown out. And I argue to the judge that the IRS is wrong and they shouldn't be allowed to do this. And the government attorney stands up and he blathers a bunch of stuff for 15 or 20 minutes, and I didn't know what the heck he was talking about.
Sure.
But when he was all finished, the judge looked at him and pointed at me and said, "He's right," and slammed the gavel. And I thought, well, this is easy. But here's the thing that's amazing about the whole story, is in between the time that my dad originally got in trouble with the IRS and the day that I was in that courtroom in Minneapolis, 1978, 79, right in there, my dad got involved with the tax protesters. Now, these are the folks that say that tax laws are unconstitutional and the IRS is illegal and it's voluntary and you don't have to pay. And, when you got tax problems, you're reaching out for any desperate straw that's out there, however thin it may be. And my dad got involved in this because people said, well, here's how you fix your problem, right? Well, unfortunately, that only makes it worse. But in any event, my dad's buddies are in that courtroom. There's 100 people in the courtroom, and they all got tax problems. So by the time I got home to my mother's house, they were lined up at the door.
Nothing like entrepreneurship.
So it was an instant practice.
Fantastic! What a neat story. Now let's talk about your book, Tax Amnesty. This is about people being able to find out ways that they can actually go about being forgiven for tax debt. But now, is this something that a person should tackle alone, or do you suggest that they actually take a look and consult with, someone like yourself with expertise in this matter?
Well, quite honestly, Dan, it depends on the circumstances. Okay. Now, I wrote the book, How to Get Tax Amnesty. It's part of my tax amnesty package with the supplement, the forms kit, and it is designed and intended to help people do it themselves, all right? It is possible to do it yourself, and I have proven that over and over again. I got a stack of testimonial letters in my office that's a foot thick from people that have written me letters from all over the country, and these letters have two things in common. Number one is the people bounced from attorney to accountant to attorney to accountant to try to get their problem solved and couldn't get it solved. And number two, when they got my book and read the book and followed the procedures, they were able to fix their problem.
Oh,
so there is no question about the fact that you can do this if you can work through the processes that I lay out. Now, some people, Dan, quite frankly, are very intimidated by the IRS. They're intimidated by the idea of taxes in general. The idea of tax procedure and negotiating with the IRS is terrifying. And for those folks, they need to get help. There's no doubt about it.
Mm-hmm. Mm-hmm. Now, here's something that I'm kind of curious about now. As a small business, I remember a couple of years ago, I went to go and file my state taxes, my business taxes. And what had happened was they said, did you know that the state government, decided to enact a law? Now, it's required for you to file taxes every year, with your business. Some people do it quarterly, some people wait till the end of the year, and that's what I do. And all of a sudden now, it's costing me $100 to do something that I'm required to do. And I started talking with other people. I said, it makes no sense to be a small business. Go small business. But by the way, since you're required to file taxes, we're going to charge you $100 on something like that. And I thought, this is ridiculous.
Yeah.
What do we do about something like that?
Well, you're talking about a state requirement now, right?
Right.
Yeah, see, now, I got to tell you this. My book, How to Get Tax Amnesty, deals with the federal tax laws specifically. Okay. And I can't tell you that I'm very conversant on most of the states. I'm not. I'm from Minnesota, and so I got a pretty good grip on what goes on with Minnesota, but other states not so much. But I will tell you this. Here, this is part of the problem that we have in this country, is that government at all levels looks at small business as an endless money tree. Right. And with state governments being so desperately in debt the way they are, they're always looking for another way to get a $100 bill out of you. And this is just another perfect example of this. At some point in time, people have got to recognize that you cannot continue to try to fleece businesses or take that golden egg out of the goose because you kill the goose in the process. Right.
In other words, you can't, skim the sheep. Why don't you try to learn how to shear it once in a while?
Right.
Okay, so let's go ahead and talk about tax amnesty and some things our listeners can come to know right now. They can start, thinking about, maybe in their particular situation. I know it's all unique, but it pretty much becomes the same thing, doesn't it?
Well, there are certainly similarities. There's certainly patterns. There's no question about that. We talked about the penalties a minute ago. I've heard people tell me 1,000 times, I can pay my taxes. It's the penalties and interest that are killing me. What can I do about that? And there is something you can do, and this is an important thing for everybody to know, whether you got a big tax problem or a small one, because every tax liability carries penalties and interest with it. Mm-hmm. But what the IRS doesn't tell you, Dan, is that every single penalty provision of the tax code has what's called a good faith or reasonable cause provision. And what it means very simply is if you acted in good faith and based on a reasonable cause for your actions, and you didn't deliberately set out to deceive or mislead the IRS, you didn't deliberately disregard your legal obligations, that the failure to file or failure to pay, whatever you're dealing with, was due to circumstances beyond your control. In other words, you didn't make a conscious decision, I'm not going to comply with the law, but life throws you some kind of curveball, and now you're behind on your taxes because of it. The penalties don't apply in that situation. Penalties apply to people who deliberately disregard their responsibilities, not people who, through no fault of their own, get behind. In a failure to pay situation, for example, there's any number of reasons why people get behind on their taxes. Pick up a newspaper, for heaven's sakes, and look at what's going on out there in the economy. There's any number of reasons why people can get behind. And as long as it's a situation where you didn't deliberately disregard your responsibilities, but you did the best you could under the circumstances, the penalties don't apply. And I'll tell you something, when you cancel the penalties, the IRS will cancel the interest on the penalties, and that can reduce your tax liability substantially and put you in a position where it's better manageable.
Fascinating stuff. Now, that isn't a real black and white issue for the IRS. I mean, it's something that you can actually approach, and it's not really all that difficult, do you think?
No, it's not difficult. The key, though, Dan, and this is where people fall down, and I've had this conversation with people hundreds of times where they say, Dan, I tried to get the penalties canceled, and they wouldn't do it. And I'll say, well, what did you do? Well, I picked up the phone, and I called them, and I said, can't you guys get rid of the penalties? And they said, no way. Well, that doesn't work, okay? Picking up the telephone and calling the people at the 800 number and asking them, can't you get rid of the penalties, unquote, is not going to do the job. And I'll tell you why, and there's a very logical reason for it. And unfortunately, the IRS doesn't tell you. The burden of proof is on you, Dan. Here's what people need to understand. The IRS never has to prove you did it wrong. You always have to prove you did it right. Okay? So the burden of proof is on you. So when it comes to penalties, the IRS does not have to prove that you're a tax cheat in order to get the penalties assessed. You have to prove the penalty doesn't apply. Right? So that means you carry the burden of proof to show that you acted in good faith and that there was some reasonable cause for your actions. You have to present detailed facts and circumstances to the IRS that will allow the reader to conclude that you didn't cheat, deceive, or mislead the IRS, that you did the things a reasonable person would do to comply, but due to circumstances beyond your control, you couldn't comply. That has to be done in writing. It's got to be done very specifically. Your statement has to be very, very clear and direct, and you should have as much documentation along with your explanation to support your position. And then you have to send it to the right people in the IRS. It's got to go to the penalty abatement coordinator at the service center where you file your tax return. And when you do that, you're going to get somebody in the IRS who's trained to evaluate penalty issues, not just the goofball on the telephone trying to collect money.
Interesting stuff, because I know that I had a neighbor who ended up hit with a $22,000 tax fine, and he's just pulling his hair out going, here we go again. And I really don't know the details about all of this, but, he's talking about, there's a higher percentage rate attached to this as well. Now, when somebody is hit with an IRS debt like that, what would you, I'm sure that it depends on what it is, but what are some basic procedures a person should start with besides, getting your book, How to Get Tax Amnesty?
Well, yeah, let's talk about some basics. Are we talking about a 2011 liability now? They just got their tax return, and there the return is, and they can't pay the money?
No, it had something to do, I think, with his home or homes. I really, again, don't know the details.
Okay, well, let's just generalize for a minute, okay? Let's talk about the person who just got their tax return done, because this is very common. The tax return's sitting on the desk, and they're looking down at it, and they owe them 5, 10, 15, 20 grand, whatever the number is. And I can't pay that money. And here, April 17th is the deadline this year. It's coming up fast. It's only 3-4 days away. What do? I can't pay this money. There are 3 things that people need to know about, Dan, that when they're in that situation. Number 1 is don't fail to file the tax return just because you don't have the money to pay. That's a critical mistake, and it adds insult to injury because the IRS adds on the failure to file penalty, which, as I said before, is up to 25% of the tax. So don't make that mistake. File the return on time. Number 2, you need to understand that just getting an extension of time to file the return, a lot of people will do that. They'll get their filing extension, and they'll say, okay, I got 6 more months here, I'll be able to scrape up the money. Just getting the filing extension does not give you more time to pay the tax. The tax is still due on April 15th, okay? So now that brings me to number 3. Number 3 is it is possible to get an extension of time to pay the taxes. And that's a form that the IRS doesn't tell anybody about. It's IRS Form 1127, Form 1127. It's called an application for extension of time to pay. And if you file that form on or before April 17th this year, you can get up to 6 additional months to pay the taxes without penalties. The important thing to understand, though, Dan, is it's not automatic. The filing extension is it is automatic, but the payment extension is not. So you have to show the IRS a good reason why you need the extension, why payment on time would cause a hardship. And if you can do that, you can get more time to pay. So that's something that people need to keep in mind. Now, a lot of people say, well, Dan, that's a great idea, but 6 months is not going to be enough time for me. I owe more than I can pay in 6 months. All right, you go to Plan B. Plan B is Form 9465. 9465 is called an installment agreement request. And that'll set the wheels in motion to get you set up on an installment agreement. And I'll tell you this, Dan, the IRS has made procedural changes to how it deals with installment agreements here in just the last 3 months that make it a lot easier to get the agreement set up, gives you more flexibility in the terms of the agreement, and allows you to stretch it out longer than you've been able to do in the past.
Interesting. Wow. Now, what about amnesty altogether?
Well, in my book, How to Get Tax Amnesty, I talk about a number of different programs the IRS has, and the key program along those lines is called an offer in compromise.
Okay.
Now, an offer in compromise is the process the IRS uses to negotiate settlements for less than what is owed. Let's take the guy who owes $50,000 in taxes.
Okay.
He says, look, I owe $50,000. There's no possible way I can pay $50,000, but I can pay, let's say, $10,000.
Right.
All right. Well, if the IRS accepts your $10,000, they waive the rest of the $40,000. You've settled your case for 20 cents on the dollar. Now, I settle these cases regularly for, 5, 10, 15 cents on the dollar. In fact, I just did one last week for 4 cents on the dollar.
Wow.
But here's what people need to understand, Dan. It's not like buying a used car, okay? It's not like you can go in there and just shoot them in the foot and see if you can make a deal, and I'll try these guys on and see what happens, and 10 cents on the dollar seems to be the average, so I'll try that. That's not how it works, all right? The offer in compromise is based on your ability to pay. So even though you owe $50,000 and I owe $50,000, my settlement might be one thing and yours might be another, okay? There's no magic formula. Mm-hmm. The IRS looks at two things in determining your ability to pay. Number one is your equity and assets. If you owe the IRS $50,000 and you've got a $150,000 house paid for, they're not going to make a deal with you, Dan, because they'll take the position they get the money out of the house.
Right.
All right? Mm-hmm. So first off, you got to consider your equity and assets. The second thing is your ability to make a payment over time. All right? They are going to factor that payment for 60 months. So if you can pay them $2,000 a month for 60 months, that's $120,000, right? Mm-hmm. You only owe them $50,000, they're not going to make a deal because they can get the money over 5 years. But if you've got little or no equity in assets, little or no capacity to make a payment, you can make a deal for substantially less than you owe them.
Oh, wow. That's fascinating stuff. I'm sure people feel very encouraged when they know that they actually have a lot more opportunity than they at first thought.
Most people don't think you can do anything with the IRS. They think they can, most people think the IRS can chase you for the rest of your life. That's not true. Mm-hmm. One of the things I talk about in the book is the collection statute of limitations. They only have 10 years to collect the debt, and if they can't get it in 10 years, they can't get it. So that's one thing that people need to know about is this, you don't carry this around the rest of your life. And the other thing is there's several strategies. We talked about 3 or 4 of them here now, mm-hmm. but there's several dozen things I talk about in the book in different ways to deal with the IRS and to keep them at arm's length and put yourself in a position where you're not getting run over. Mm-hmm. And people need to know about this. And I'll tell you what, there's so many strategies that are available that there's no such thing as a hopeless tax case. I don't care what kind of tax problem you have. I don't care how long you've had the problem for. I don't care what you've tried to do to fix it. I don't care who's told you can't fix it. There's no such thing as a hopeless tax case. There's always some way to deal with these guys.
Mm-hmm. Now, one of the things you were talking about earlier in the program is the fact that, they had put a lien or tried to seize your parents' home. Now, you also offer how if you have actually had seized property happen, that there is a way that you can go about recovering that. Explain that a little bit.
Yeah, absolutely. In fact, people need to know about this, too. There's 2 provisions in the tax code. In fact, I'm working on a case right now involving one of these provisions. Anytime the IRS levies property, let's say they go clean out your bank account, and that levy causes a hardship, you can go back, even though you owe the money to the IRS. There's no question that you have the tax liability and the IRS only collected part of the money through a bank levy. If you can show that levy is causing a hardship, they can send the money back to you. They can get it released, okay? Mm-hmm. And people that can help you do that are the taxpayer advocate. The IRS has got, there's a function within the Internal Revenue Service called the Office of the Taxpayer Advocate, and these people are set up to function as a liaison between you and the IRS to help you out when normal channels fail. Mm-hmm. And so you can do it that way. The other thing that's available, Dan, is anytime you full pay a tax liability, whether you legally owed it or not, the IRS seized the money, okay, now they got the money, but I don't think I really owed the money, then you've got 2 years from the date that tax is paid in which to make a claim for refund. So that's something that's effective as well.
Mm-hmm. Now, tell me something, Daniel. Let's say in the case of my neighbor that he, was levied with his $25,000 fine. Now, again, I really don't know what it is, but I'm kind of curious now. Let's just say that maybe it is against his mortgage or his business. I don't know. Now, is there someone that he could take steps to contact at the Internal Revenue Service to, see about how this can be worked out, or maybe even be forgiven altogether. I don't know.
Well, yeah, and again, it's difficult to comment, Dan, because we don't know what the facts are.
Right, I understand.
But I'll tell you this.
Based on what you were saying, I guess we're cutting through the guy at the 800 number, the monkey that basically can't wait until Friday comes and to go on vacation. But the real guy, it's like I say, the person of influence when you're looking for a job, who has the power to hire is basically what I'm looking at. Right.
You're exactly right, and that's a good question. Let me talk about two potential scenarios. Maybe the guy's got an audit. Maybe he went through an audit, and the IRS sent him a bill and said, "Okay, here's this bill. You owe us $25,000." And now your neighbor's looking at this bill for $25,000 and doesn't believe he owes it. In that situation, Dan, he's got a right to protest. You have the right to challenge any audit decision by writing what's called a protest letter. When you submit the protest letter back to the tax auditor, they have to send your case to the appeals office, and that gives you an opportunity to sit down with somebody who has the legal authority and the personal desire to work out the correct answer to the case, to work through and get a solution. If he's dealing with a collection notice, this is a bill from the IRS, you owe us $25,000, your appeals are exhausted, now we want the money. Now there's a couple of things he can do. First and foremost, you need to understand that before the IRS can issue any levies, seizures, any of those kinds of things, they have to mail what's called a final notice of intent to levy and notice of your right to a hearing. This is an unmistakable letter that comes certified mail, and it's identified as IRS letter 1058. When you get that letter, they give you 30 days to pay up or else. Or else what? Or else you have the right to appeal. You can file what's called a request for a collection due process hearing, and this gives you an opportunity to take the case out of the hands of the collection function, and it goes into the hands of this appeals office, which I just talked about a minute ago. These appeals officers, now you'll get a settlement officer in a collection due process case, and these settlement officers, again, are typically looking for a way to come up with a reasonable resolution to the case, whether it's installment agreement or compromise or any number of the other options that are available.
Fascinating stuff here. So, obviously we've got a couple of roads, because I'd kind of like to run over and say, hey, let's take a look at what you really got here and, explore what you can do, because this guy's really pulling his hair out. He's an independent contractor, and, it's nice to know, that there's always hope for something out there, if nothing more than delaying and reducing things.
Right. Well, and that's the thing. Most people think in terms of delay, but when you're dealing with the IRS, it doesn't help you to delay. Right. I hear the phrase all the time, attorney delay, just drag. No. Mm-hmm. And the reason for that is because the penalties and interest continue to run. Right. So you got to deal with this head on. If you don't owe the money, you got to get in there and get that established. If you do owe the money, you got to get some resolution in place so the IRS doesn't run you over in the process. Mm-hmm. And the sooner you do it, the better.
Okay. Sounds great. Now, Daniel, what's a website people can find out more about this?
Yeah,
I've got your book sitting in front of me. Very encouraging stuff.
Well, good. I appreciate hearing that. The website is taxhelponline.com. That's all one word, no spaces of any kind. Taxhelponline.com. My tax amnesty package is featured on the site, as is all the rest of my material. Taxhelponline.com.
Okay. Now, one final question. Obviously there's a lot that's extensive, and this was made for people to be able to tackle these things on their own, and you say they've been pretty successful. When do you get to a point that you actually feel people should start looking at the possibility of hiring an attorney?
Well, I think that's an individual question, Dan.
Okay.
As we said earlier, there's some people that just can't do this. They just can't cope with the stress. They can't cope with the anxiety. They're intimidated by the IRS. Those folks need to get counsel right away. Okay. Anytime you're dealing with the IRS and the F word comes up, if the IRS breathes a word of fraud anywhere along the way, you need to get counsel right away. Okay. Anytime things start to feel like they're getting out of your control, that you're not able to deal with the questions, or the IRS is going in directions that you didn't necessarily anticipate, or that you don't know quite how to handle, you should at least consult counsel in those circumstances as well.
Mm-hmm. And I know one thing too, people will take a look when it comes to getting legal counsel, is they say, well, that can be expensive, and I think,
that depends on
well, what's the alternative?
Well, you know what, and you're right, Dan. I mean, and I would say that too. I mean, if somebody's facing a $100,000 tax bill, it probably makes some sense. Get some counsel right away. But if you don't have the money, you don't have the money.
Right.
And even though it would be a sound investment to spend $5,000 or $10,000 on legal counsel to help you with a $100,000 tax bill, that part of the math is easy. But you still got to come up with the cash to pay your lawyer.
Yeah,
if you don't have it, you don't have it, and that's why this material is so effective.
Mm-hmm. TaxOnline.com is the website. The book
Tax Help Online.
Yeah, Tax Help Online. I'm sorry, TaxHelpOnline.com. The book is How to Get Tax Amnesty. And our guest today, Daniel J. Pilla. Daniel, thank you for joining us here on the Beyond 50 radio program.
Thanks for having me, Dan. I appreciate it.
I want to thank you, the listeners out there, for tuning in. We'll have that posted up on our website as well. That's beyond50radio.com, the number 50. We also have a free weekly e-newsletter we'll be posting an archive for you as well on our blog. I'm Daniel Davis. Thank you for tuning in. This is the Beyond 50 radio program. And remember, live your day past half the days.